right, so we are all here to this webinar. It will be about unveiling the perception of trading. And I want to go into the topic of professional trading, gambling, and hope, which is very emotional trading, okay? So first of all, please read my disclaimer. Okay, so here's my disclaimer. I'm not your financial advisor. I won't be talking about single stocks or any of that, but just I have to do it, just that you guys know. Anything that I mention here is not a financial advice. It's more for entertainment and education, okay? So, and if you want to take trades, you better know what you're doing, because you can lose your money and all your money, and you rather talk to financial advisors about what you want to invest in. But that's a disclaimer. It's boring and it's annoying, and I had to do it anyways. Okay, so okay, one second. One second, I'm going to share a screen with you guys. Here. So, okay, can you all see the disclaimer? Let me know, okay, if you can see it. Okay, perfect. So, all right, let's do this, guys. So, let's start. So, my name is Leah. You guys know me already. You know me as Leah the Trader from social media. And I would like to thank you all for being here, joining this webinar. And I will tell you quickly about me. I don't like to talk about myself for too long, but just that you know where I'm coming from. I lived in 6 countries across Europe, and now I'm in the US. And I was a real estate investor since my very early 20s. And I moved in Germany. I was investing in real estate, and then I moved to the US and I was studying. And my undergrad, I did biopsychology. That's why I have a lot of knowledge about psychology and biology. I wanted to become a psychiatrist. But then I went to study negotiation and conflict resolution at Columbia University, which was really fascinating. It was a lot of business and diplomacy. And I learned how to deal with conflicts. And that's what I used later on as a relationship coach and marriage counselor for 10 years in my work. And in COVID, I became a trader. So I've been actively trading for 3 years now, over 3 years something. And I realized while I was trading, I learned all the technical analysis, everything you guys need, and you guys know a lot of that stuff also. But I realized that the psychology is so important that no matter how well I understand technical analysis and I can do charting, it's not going to help, because if I'm freaking out and I can't control my emotions, it's not going to help. Okay. So right now I trade stocks and options. I love to sell options, and I love doing spreads, option spreads. And that's pretty much what I do. I'm a profitable trader. I live off of trading mainly, and some passive income from my investments, from real estate to, you name it, stable income. So what to expect in next 50 minutes, guys? I'm going to talk about how different traders perceive trading, okay? It's a big question whether you approach trading as a profession, or you like to gamble or to have the adrenaline rush, or if you are hoping to get out of financial stress and become rich, or get out of debt, you know, so the hope aspect of trading. So today I will dive into all of those, and I want to show you that the right mindset is really important in trading to be successful. You know, the truth is that the right attitude is everything. And I will be asking you many questions you can answer to yourself and understand what kind of trader you are, because oftentimes we don't even know what mistakes we are making, and we don't even understand that we might be actually gambling instead of trading, you know. So that might be explaining a lot of the losses that some people have, you know. And you know, I will then show you my routine, as I said, what I do every morning, how I prepare before I start trading, and I will help you create this checklist that you can have. As I said, have your notepad and pen ready. Take notes, guys. And also, I don't want to interrupt this webinar, so please, you can ask Q&As. I will reply all of them at the end, and all of them, or whatever time we're going to have. I will try my best. I'm not going to interrupt my thoughts, because then I would be all over the place, and I want you to guys have the best experience and the most information possible in this short time. Okay. So the webinar is recorded and I will send it to you tomorrow after this webinar. Tonight, not, it's too late. And I also have to prepare for the market for tomorrow, but tomorrow you will get the recording in a day. So let's jump straight in, guys. Let's do it. So when trading is a profession, okay? So what does it mean to you to be a trader? These are the questions I want to ask you. And now you can just think, okay? Just think and brainstorm with yourself. So when you started trading, what was your goal? Like, what were you thinking actually when you started trading? What was your motivation? Or did you even like have any sort of like plan, or did you see yourself maybe 10 years from now doing this as a professional? Or perhaps you just wanted some excitement, you were bored. A lot of people started trading in COVID from boredom, or you wanted to really make some quick money or make money in general and create better life for yourself and your loved ones. Maybe you wanted more financial freedom. You're sick and tired of 9 to 5 and just having a job. You wanted to do things on your terms and from anywhere, right? So these are all the questions you need to answer before you actually trade, or even now. Again, like, it doesn't matter how you started, you're here now with me in this webinar, and it's important how you're going to approach it from now on, right? So we're going to have a little breakthrough free here. So if you are here in this webinar, it's already good because you're educating yourself. And if you want to be in this field for a long term, you will have to treat trading as a profession, because everything else will be very short-lived. And every profession requires education and training. So let me tell you quickly my story, how I mastered trading. And let me tell you, it was a long and torturous journey. I cried often. I'm a girl, I can cry. Guys cry too. Some guys I spoke to, they just had tears in their eyes when they were learning trading, which is totally fine. We can all cry. You know, like for 2 years after 20 something, 19, 20, I was investing for over 10 years, but the active trading, I'm talking about day trading and swing trading, I haven't done that before COVID. So 2 years it took me to find the right system. I was all over the place, you know, like I made money, then I lost money. It was just really all over the place. And I couldn't really learn like how the market works. I was not getting it. I was just really frustrated. You know, I couldn't be profitable consistently. And that's what you want, right? You don't want to make money one day and lose them another day, because that's a waste of time. So in this time of learning and being all over the place, I made probably every single mistake you can possibly imagine. I lost a ton of money. I made some money. I lost them. It was just heck-mack, you know, and I felt so many times to give up. Like really, so many times I said, why I'm doing this to myself? You know, there were some occasions I was so frustrated that I literally cried, as I said, and I was asking myself why I'm doing this to myself. I can just live on my budget with my passive income and just sit with my ass in Miami Beach and relax, you know, and instead of sitting here in my little woman cave, you know, 6 to 8 hours a day, reading about stocks and earnings and studying charts. So why I'm doing this to myself? And, you know, something inside of me was telling me that, you know, stay with this. Like the determination and drive to learn was there. And I wanted to really succeed in trading, even if it meant for me, like many of you maybe are still struggling to be consistently profitable. Even if it means that you might have to lose some more money as you're going to be practicing, but you will have to be taking calculated risks. So these losses will not affect you as terribly, you know, as like you're going to not blow up your account if you really take calculated risks. So, you know, it was a tough decision to continue at some point, because like I remember August 21, I was just really frustrated and I wanted to give up. And then I took some time off. I took a month off, calmed down, did some meditation, and I evaluated my life. And I was in Europe. I said, you know what, like I want to be able to travel and have freedom. I want to see myself 5 to 10 years from now having 3-4 residences and move around them and be able to make money from anywhere. So I am gonna better fucking do this. You know, and once you master it, guys, you're gonna have this skill set for your life. And no matter where in the world you're going to be and you're going to need some extra cash or live on this money, market will provide, you know, market will be there for you. So please keep practicing managing your risk better. And remember that with each failure, there is a lesson. And, you know, I took this knowledge and I was working hard and I was trading almost every day. And slowly and surely, I started having my strategies in place. I was, as I said, calmed down. And at some point, I found my edge that worked for me. And this hard work and the frustration paid off. And trust me, I still get frustrated sometimes, but it's not like, oh my God, all the time. Like we all will get frustrated at some point. Even people, they trade 30, 40 years, always get frustrated when something really doesn't make any sense and goes against them. So you will never eliminate it completely, but now trading became so much easier for me, and I have a clear plan what I want to do. I have defined rules when I want to enter the trade, when I get out. I don't care if I lose and I have a stop loss. It doesn't bother me at all. I'm managing my emotions. Like I don't have an ounce of emotion if I lose on a trade, because I lose little, so without too many emotions, I'm able to stay rational. And now, like, guys, the market is very dynamic. It's changing. Like, for example, last year, I made the most money by selling puts and, buying these massive dips and just selling rips, which were like 2-3 weeks trades, right? We saw it in August. There were like some months that the market just went completely crazy and there were massive dips. So that was my main income last year. But this year, the market is choppier, right? Like, I swing trade. I always love swing trading, but this year I'm swing trading shorter, like faster. I don't stay in the trades for too long because, the market is choppier. I don't want to give my money back. So I'm like much quicker. And that's what I adjusted, And also in those years of practicing, which will be important for you guys, I learned what worked for me and my personality. Okay. So, and I also realized what didn't. So I'm not scalping anymore, which doesn't work for me. I get too anxious. I'm trading equities of my favorite stocks mainly. I have like 20 stocks I love, and I mostly trade those, and I also sell longer term cash secured puts, 30 to 45 days, which works for me really well. If I get assigned, I don't care. It happened to me 3 times last year from like 100 puts I sold. Okay. And I don't mind, owning the shares for that price plus getting the premium. So I no longer day trade options, for example. I'm not suggesting it's a bad idea. I love people, they do it. I appreciate them. I think they're great masters of day trading options and God bless them, but it's not for my personality. I didn't know how to manage risk well. So I stopped doing it. As I said, I'm selling options or I love spreads. So that's enough about my journey. So you see, it was a journey up and down, and you can have a journey like this too, and you will figure out if you're, learning and following like who you really are, what works for you. All right. So how do pros trade? Okay. So pros, if you want to be a professional trader, guys, trading really requires diligence and dedication. It's not an easy path. And when it's done correctly, you can really make a lot of money. We all know that. But you need to be patient and persistent. Anyone can learn to trade successfully if you give it enough time and you will really back trade and practice. So don't give up and believe in yourself, guys. Anything is possible. And if you really want to be in this game for a long term, please be realistic. That's number one important, because if you have unrealistic expectations, you're going to give up because you will be disappointed. And I'm going to bring a little story from a book of Jesse Livermore. I keep talking about this book, but honestly, The Reminiscences of Stock Operator is one of the best books that's out there. It's over 100 years old. And the psychology there is so perfect. Like, it can be better. Read it. If you really haven't read that book, you need to, because he's explaining how the market works and human psychology so well in stories, and we love stories. So he says that the training of a stock trader is like medical education. The physician has to spend long years learning anatomy, physiology, and other subjects. He learns the theory and then proceeds to devote his life to practice. His life to practice. If you're a trader, you have to practice your whole life. It's not gonna, end. Market will be changing. You will have to practice, right? And then he continues and says, he observes and classifies all sorts of pathological phenomena. He learns to diagnose. And if his diagnosis is correct, he ought to do pretty well in his prognosis. Okay, so you observe the charts and you do diagnosis of the charts. Well, you might have a right prognosis and your stock will go the way you want. But always keep in mind that human fallibility and the utterly unforeseen will keep him from 100% scoring. And that is why I'm mentioning it, because this is super important, guys. Like, you will never score 100% in the markets. And that's why you need to have realistic expectations. You have to understand you will never be perfect when it comes to trading, but the controlled imperfection in trading is a professionalism. And that's what you want to be. You know, I see many traders freak out because they're losing. They get really angry. They get emotional because they're not right. Their ego can't take being wrong. I had guys telling me, Leah, I cannot trade because every time I lose, I feel like the worst idiot, and it's ruining my ego and self-esteem so badly that I cannot look into myself in the mirror. So, okay, don't be that guy. You really don't care about that. If you're wrong, move on, have stop loss, and that's it. Next one. You know, there are other professionals like lawyers and athletes. Imagine golfers or tennis players, guys, how many hours they practice to become professionals. Trading is not as easy as it looks on Twitter, like, oh yeah, or Instagram, I made 10, 20K in an hour. Ask yourself how many years these guys actually put into this learning and to practice their skills until they made this 10, 20K in an hour. It's a sweat and tears of years of practicing. So be rational about it. And always learn from your mistakes, guys, because mistakes are a great teacher, but make sure the mistakes are not that giant that you completely ruin your portfolio, you know. I used to hate being wrong on a trade. When I started trading, I was so bitter every time I lost. Like I remember once I lost on Facebook and I was so upset the whole weekend. It was like from Friday till Monday, I was really upset. I ruined like whole entire beautiful June weekend. I could have gone out with friends. No, I was pissed because I lost. And then I was miserable to be around. And my friends are like, okay, Leah, you are really annoying. So you don't want to be like that either. You know, don't mix your personal life with market, okay? So yeah, when I lose, personally, I have no ounce of emotion at this point, but I have to analyze. Look, why did I lose? Is it because I didn't follow my plan? Or is it because this trade went against me? And that's fine. If it went against me, okay, I move on. If I made a mistake, I'm going to look, what mistake did I make? Did I move my stop loss too fast? Did I freak out? Was I greedy? Was I chasing? You know, you have to always analyze those, you know, and it's important for you as a trader to know when it was a mistake and when it was market not corresponding to what you thought is going to happen. Okay. So if you want to be a trader, a professional trader, guys, you will have to educate yourself all the time about the markets and whatever you're trading options. There is always something new happening. You have to constantly be educating with like every other profession. You will have to, you know, see new analysis, you know, technical analysis, fundamental analysis, depending on how you're trading. Be ready to be, you know, learning. So that's going to be important for you. And I'm personally a technical trader and fundamental investors. I combine those two for investing. So I like to invest based on fundamental analysis into companies that I really like and I know their financials. But I also look at the chart. I'm not just going to say, oh, I want Amazon and boom, buy it. I look at the technical chart and see where I have potential supports. And that's how I do it. You know, it's much better that way. So you can combine it as well. You know, I'm patient with my levels and I wait. I can be selling puts until I get assigned on the price I want to. Okay. But the sale of options, I might do another webinar on that and teach you how I do it because it's a super fun passive income and it's pretty safe if you do it right. So I hope you guys let me know in the chat if you want me to do another webinar on selling options. That would be fun to know what you think. Okay. And another critical component of professional traders is risk management, guys. It's honestly, you are a risk manager as a trader. So you need to really have your stop loss, control your position side, don't oversize on stocks. I know it looks great. If I make 1,000 shares of this, if I have and I make this money, I will make this A, B, should have, could have. Don't do it. Really, like, rather be realistic, buy whatever you can afford and what suits your portfolio, guys, because you can blow up your account really fast. Okay. And lastly, if you want to be a professional trader, treat it with patience and look at trading in a long term, right? So if something happens in trading, you lose money, don't define yourself as a human being because you lost on a trade, right? So this quick get rich quick doesn't work. It maybe happens. You see it on social media. It doesn't happen in real life. If someone made money overnight, they usually lost them anyways, because if they use this YOLO degenerate way to make this money, they're going to do it again and then the luck won't be on their side most likely. And I hear those stories. So be patient. All right. Another one. So what's the solution, guys? How can I help you to become more professional as traders? You know, you need to stay focused and disciplined, of course. And you know, it's hard when the market is moving really fast. I know the market opens, it's crazy, and it's moving too fast, and you just get so emotional. You want to chase things, you want to make money. There is FOMO, all this. We spoke about it in my last webinar. So what helped me is to have a system, guys. As I mentioned last time, you can see it on the chart here. What I'm showing you is the R system. It really keeps me calm because I know how much I'm going to lose on each trade in the worst case scenario. So that way your losses are not out of control and you don't lose more than you should. And that way it really helps me to stay organized. So then you have your trading plan and keep a record of your trades. That's what I'm doing. And I look at them all the time at the end of a week, end of the day, sometimes, and the end of the month. Of course, I do a huge review of my trades. I have a trade journal. I use Tradezilla for that. It's an amazing company. I will talk about it more later. And that helps me to keep my emotions in place, so, and also maintain discipline. So, but you might ask me, okay, Leah, how to stay organized? I know it's easy said, it's hard done. I know most of traders and people in general are really disorganized, and that's a fact. So I have some ideas for you. Write it down. I have 5 things that I do to help me be organized, sorry. Sure. Because I also tend to sometimes be disorganized in the past, but I learned in trading, guys, it doesn't work. You lose money. So again, you have your trading journal, really. It's super useful tool. You want to use them to record your thoughts and emotions, the reasons and why you took the trade. Like, have you ever asked yourself, why the heck did I take this trade after you took it? I'm sure you did ask, right? Like, what the heck did I do? Why did I do this? So then you answer it to yourself, Again, like I'm using Tradezilla for this. There will be a link in the chat. I will post it soon that you can use it. There is also some fee for that, but it's really cool. Second, I keep a calendar, guys. We are in a crazy times with all the FOMC meetings, markets sometimes choppy before, sometimes there is only 4 days a week. So please keep a calendar, guys, that because theta on options, for example, can kill you. If there is only 4 days, you might think, oh, I have one more day. You don't, it's going to be messy. So please have the earnings too, because sometimes you don't know and you sell or buy options over earnings, you're going to pay massive premiums. Third tip is to use trading alerts, guys. If you don't want to stare on the screen all the time, every broker has trading alert. You can set the price at, below, or above, whatever you want to be alerted about, and then you can take action. So you can get a text message or email from your broker. That's very useful. 4, guys, minimize distractions. A lot of people are glued to their phone like all the time. We are like constantly with our phone, and friends are chatting, phone is beeping. It's really hard to focus on trading if your phone is constantly beeping, and it's good to unplug from social media unless you, of course, are trading with rooms that you need Discord and all that stuff. But then you can also set settings in Discord that you only get a certain channel notifications, or you can have a voice notification. As I said, like the phones are really bad. I'm trying to leave it in another room when I trade because it just distracts me so badly, and I miss trades sometimes. I'm answering my family, friends. No bueno, no good. So that's a good tip for you. And lastly, have a good work-life balance, guys, because health is really wealth, and nothing, if you have money, nothing is going to help if you're sick, and you don't want to be spending the money you are making this hard way with trading for doctors. You don't want to spend it on vacations and cars and fun stuff and girls, I don't know, whatever. So make sure you have good work-life balance. Really do something for yourself every weekend, party, have fun, enjoy time with friends. So that's the 5 rules that really can help to be professional. So trading as a gambler, I want to talk about this just quickly because a lot of traders I met, they do gamble instead of trade. And, have you ever thought about why people are treating trading as gambling, or why also we oftentimes hear, oh, you're just a gambler? You must have heard this before, like in news, or when people are judgmental, sometimes they say, oh, you're just gambling. There is no day trading. Well, because there is a lot of thrill in the market, and there is a lot of people that like the thrill of taking risks, and they can get caught up in the excitement of trading. It's like they're playing a game of chance where anything can happen. They don't know what's going to happen, and that really is like turning them on. They want to do it, the dopamine. But many traders, who do this are also risking really high. It's a high risk activity. They get the adrenaline rush with taking risks. And the problem is they're going to make poor decisions based on a game of chance, and a guesswork, instead of actually making decisions based on discipline and risk management. So as a result, they lose money, they lose a lot of money, and they lose them quickly. And most likely their career will be very short-lived. They run out of money. I get it. Look, we all want the excitement. I'm excited too when I trade, but there is from there to there. You know what I mean? Like, you don't want to be overly excited, like, oh, I'm going to just trade whatever trade I take to satisfy my dopamine rush. So, this leads to poor risk management, guys, and poor performance later on. And if you are here, you probably want to succeed and make money. So please don't indulge to this negative mindset of trading and gambling, and have realistic expectations. And also, I have some questions for you here. These questions that you can see on the screen, you can ask yourself if any of those is yes. More the yes, the worse it is. You might be trading as gambling, guys. So, you're taking too much risk, have huge losses. Did you devastated your account in the past? Maybe you lack discipline and patience. You just enter positions when you shouldn't, or you bail too quickly. It's just like a game for you. You can find yourself frequently entering trades without any research, just YOLO. That expression, you live just once, you only live once. And are your trading decisions based on hunches or tips from friends and other unreliable resources? That's also not good, guys, because it's good to get tips, or it's good to get tips in Discord groups and Twitter, but take the tip and actually analyze it and do your due diligence, double D, okay? Then if you're over trading, jumping from one setup to another, risking too much capital, or does winning or losing affects you so badly that how you feel about yourself as a trader? These are all the questions. I have them here. Think about it and see what you think. Maybe you didn't even know you're making those mistakes that are considered more gambling than trading. Okay. So sometimes we also lie to ourselves, and we don't want to answer those questions realistically. That's why I have them here for you. So as traders, we need to recognize that trading is much more than a game of chance, which you guys probably know by now. And we need to do it disciplined and have proper risk management. I keep repeating it, and that's how you're going to sustain in this game a long time. Okay. So you need to set realistic goals, and the biggest issue traders have also, I want to say it at the end, and it's going to be super direct because you guys know me. I'm very direct and nice, but people are just lazy oftentimes. They don't want to do the work. And they are not disciplined. They want to just take a tip and boom, that's it. I want to make money quick, get rich quick. So no more gamblings, guys. Okay, let's go to the hope. Trading as a means of hope and the emotions around it, guys. Okay, so this is an important one since I'm the trading psychology coach. Many people start trading because it provides them a glimmer of hope to be financially free or have some financial stability. A lot of people are financially stressed and they say, oh my God, my friend made this money in the market, I'm going to do it. The hope can be a powerful motivator, driving trader to put in time and effort required to achieve success. But however, when the hope-based trading is combined with lack of knowledge, guys, with no experience and no discipline, it's going to lead to financial loss, right? This is like the worst combo, like stress trader. And I need the money, the neuro-linguistics, I'm like hypnotizing myself. I need the money. I need them quickly. I need to pay my bills. I need to do this. So there's nothing worse than that. And, also like people that are greedy, they want to get rich quick, that's also, they will just risk it. They say, I don't have any other choice. I'm broke. I hate my job. I hate my life. I'm just going to risk my last money in the markets. Okay. So like a famous example of how hope can lead to losses was like panic of 1907, where many banks and financial firms went bankrupt due to speculative investments because people were irrationally optimistic. And then, of course, the dot-com bubble in 99 and 2000, guys, the investors are completely blinded by their hopes for getting quick rich. And ultimately, a lot of people lost everything in those years because they were investing money in the crazy tech companies and all their money, and they didn't take their profits. There were people just let the money in there. I'm sure you guys know about the dot-com bubble. And past few years, what did we see? Someone buying an NFT of a rock for $500,000, crazy shit coins, Camrocket. I don't know, like you name them. There were so many crazy coins. Like, okay, that's also kind of a hope. Like I'm buying this billions of Shiba coins and I hope that one day it goes to $1 and I'm going to make $1 billion. Okay, good. It's a hopium, guys. The people are drinking hopium cocktail. That's not going to happen, I think. Anyway, so traders who approach trading with hope are susceptible to emotional involvement in their trades. They're trading emotionally. As I said, if you tell yourself, oh gosh, I need to pay the rent. Oh my God, I'm in a debt. I have to pay off my credit card. My last $2,000-$3,000. I need to make the money in the markets. You are most likely gonna react very emotionally, and you're gonna probably take trades based on fear, based on greed. And at the end, you're gonna probably ignore fundamentals or technical analysis and lose money. So please, if you answer these questions, there is some work you need to do. And also like. People they're hoping are also rushing because they need the money, so they want to do everything fast, and nothing in trading works fast. You need to put time to practice and learn. So what will they most likely do? People they're drinking hopium cocktail, they follow someone on Twitter, they follow someone, they pay for a Discord, follow trades. They take those trades and they lose money because they have no idea why this person is taking those trades. They have no idea when to get out. A lot of times you don't even have a stop loss. Nothing against Discord rooms. I mean, some Discord rooms I love. I love my friends. I love to support their businesses. Like I love to be in Discord rooms more that are like collaboration of great traders. We chat about, ideas and experiences, and, I give them trade, they give me trade, and we discuss, that is great. But you need to always do your due diligence, guys. Don't just take the trade like you see an alert, you buy it, like look at least at the chart, at least understand, is it a breakout, is it a retest, where do I get out, like how much of this do I buy, options, where do you set your stop loss? Please know these things before you start, because just taking tips. And also remember one thing, if you're going to trade like this, just taking someone's tips like puppet, what if this person is gone? Even if you're making money, they're gone. And then you're like on an abandoned plane without a pilot because you don't know how to land the plane. You're going to die. Like you are not going to be able to make money. And people love tips because people are lazy, as I said, and they just love, their heart is happy when they get tipped. They think, oh my God, I got a tip from a friend and from this guru, furu, and I'm going to make money quickly. So it's not even a greed, it's more really the unwillingness to do the work, guys. And we have to do work if we want to learn trading. It's simply as that is, So don't believe in miracles. Hope will make you believe there are miracles. Stock market, there are no miracles. Many people YOLO'd their money, lost all their savings. It's not what you want to do, please. I'm really trying to protect you from this kind of behavior. And I want you to learn because you want to have the skills. You want to be able to fish, not just get the fish from someone else. And then the fisherman is gone and you will be starving. Okay. So stop drinking the hopium cocktail if you have this problem. I'm not saying all of you have. And, I'm very direct and I will always tell you the truth and what I think and what I learned from coaching people, what I hear from guys and girls that come to me, and I talk to them very intimately about their experience. Okay. So to wrap this up, guys, people hopeful are basically acting upon emotions, so if you're going through this stage, you need to manage your emotions around this effectively, guys. Stay disciplined, take a break, think about those questions I give you, okay? So you don't have clouded judgments. Please have a plan, stick to your rules, and set your expectations straight. And also, in addition, maintaining emotional balance is very essential in trading. Take a break from trading if you are overwhelmed. Practice meditation or breath techniques. Just like make sure that you are able to leave the trading desk, that you're not addicted to trading. That's again the gambling problem. Okay. So also reduce your risk, have some diversification, please. Don't YOLO all your money in one trade. Use stop losses and manage your position size. Please don't buy too much, because if you buy too many shares, it's going to go against you much faster. All right, so now let's go. We have about 20 minutes. I want to quickly go into my trading routine. Okay, Tuck, here is for you. You can see it. First of all, I wake up, I start around 8 a.m. I check with myself how I'm doing, okay? If I had a good night's sleep. If I didn't, I don't trade because I'm a sucker if I don't sleep well. Some people function well on lack of sleep. I'm not one of them. Then another one is, how do I feel? Do I have something going on that is making me really upset or sad or like depressed? You know, I can't focus. This is important, guys. Check with yourself and see how you're doing, because you don't want to be revenge trading from anger or any of that stuff. Mental state is very important. I just recently looked at my trades a lot from March, and I had 5 losing days. One day I didn't take, so 4 losing days in a row. And I was looking at that and I'm like, why did I have this terrible like losing streak? Because I was really sad. Something was happening in my life that I was just not focusing on trading. I could have saved myself $2-3 grand that those 4 days, or I don't even know how much more. And you want to check with yourself, okay? So if you're good to go, you see the overall market, guys, see what the market is doing, what's the sentiments, because remember, if the market is sucky, it goes to direction and you want to take something long, the market is choppy or doesn't look so good, it will be hard for many stocks to actually perform as well because the market is not cooperating. So when you're trading, always have your SPX or SPY chart open. When you trade mostly tech, I also look at QQQ. You want to look at those things. So then I check scanners. Okay, I'm going to give you trade ideas link. If you want to use that, Leah 15 will give you discount. I don't make much money off it. I'm an affiliate. It's a little bit, you know, I'm going to be super honest with you. It's not like I live off of that, but if you use Leah 15, you can get 15% discount. Is a really cool platform. I use it to do morning scanners, and it shows me pre-market. It shows me what stocks are retesting to the AVWAP. It shows me what stocks have the highest volume in that morning and the biggest move, and you can set up the scanner as you wish. Then there is bar chart. I love to use bar chart for gaps as well. Gaps up, gaps down, but also these are all paid. They're not that expensive, but they're really good. And you can have all of this on your broker, guys, like Thinkorswim or Webull. They have excellent scanners. You just have to set up the settings. What you want to be scanning for? There's so many stocks, right? You don't want to look for all the stocks, 15 or whatever, 1,000 stocks. So you want to scan what you want. So I personally trade gaps, and at least stocks like big gaps. I look at the gap scanner and see what stocks have the biggest gap. The stocks have to be at least $20 for me. I don't trade really too often stocks that are below. It's just very rarely I do that. I want at least 400,000, 500,000 daily volume on those stocks. That there is, you know, liquidity. I want liquid stocks. And then second, what I do, I have a portfolio of my racehorses, I call them. This is like 20 stocks, 25 approximately. I trade most of the time. And I trade these stocks for a year, 2 already, and I've been trading them all the time. So I have like my watch list of this, and I look what is happening on Leah's watch list. And when I see there is like in pre-market, oh my God, this stock is doing really poorly or really good, I check the news, I check what's going on, I check, you know, if there is some catalyst, what's happening. And then if it's up like 3, 4, 5%, or you name it, I pay attention to this also. The good thing is that when you're having your list of stocks that are favorite stocks that you learn how to trade, you're going to kind of understand their behaviors well. And also you're going to have, you know, you draw your support and resistance lines. And I already will have them on those stocks because I've been trading them all the time. You have to always draw the new one on a smaller time frame, or like last day close. So you always add more and in the morning, which I'm going to get to. But you're going to have the older one. You're going to have, you know, and they work sometimes. So you're going to have less work if you trade the stocks that you really like. Then, of course, from all of these stocks, I pick like 2-3 guys. I don't want to trade more than that because I cannot pay attention to more than 2-3 stocks, to be honest with you. So I will look which has the best gap and how I'm picking those stocks. I basically look for the path of least resistance. Because if you have a great gap on a stock, and gap means that the stock closed at some level the day before, and it's gapping up much higher than it closed, or down much lower. So that would be for potential short. But then I look at the chart, I go from daily, I go to hourly, I go to 15 minutes and 5 minutes. I look at the chart and I'm like, okay, what is standing in the way? And if you have like moving average or anchored VWAP in the way, or some crazy supply or demand, if you want to short, right? You know, I don't want that trade, because you look when you want to enter, where you want to put your stop loss, and then you want to at least make 1.5 hour of the same amount. So if I have a huge moving average right above my head, basically as a resistance, I don't want to take the trade because the risk to reward is poor. Okay. So from all those stocks, I will pick a stock that has a lot of volume. There is some news or catalyst, and I see that there is path of least resistance to the short or long side, which I will see that, okay, there is nothing standing in the way. This stock can really rally. And that's what you want to trade, okay? So then you draw your lines, and at like around 9:15, and, you know, I do my research, have my coffee, maybe have a little food, and then 9:15, I have these 2 free stocks, and I'm going to pay attention to them. As I said, I have my SPX spike. QQQ open. I look at the VIX as well sometimes, although now it's a little bit confusing with the VIX, but, you know, 2 free stocks, and that's it. And then I have my plan, like short to the open, like how I'm going to trade this. You know, do I want to do retest or opening range breakout? I use Fibonacci's, for example. I kind of have this plan that if A happens, I will do B. If the B happens, I will do C. So you want to have a potential entry, potential stop loss, and exit in place approximately, you know, because that's what you need to have. And then I'm just waiting, and I see when the market opens how it all reacts. And I don't trade the first 5 minutes. I usually day trade on 3 and 5 minute charts. I have them both opened. I don't do the 1 minute chart because it's moving too fast for me. So I day trade on 3 and 5 minute chart. I have it all opened, and I see how the first candle closes. I see how the market is corresponding. The first minute is super volatile. The first minutes are in general volatile. So then if it's opening range breakout, I look at the first candle, use Fibonacci's, I do the retest 0.5 or 0.618. Then I have my stop loss right below the gap. You know, there are many techniques you can use as a trader. This is more about my routine. So I don't want to go too deep into those techniques. We can do it in another webinar again. There's so much I could talk about. You know, then you have your stop loss, and then of course you have the risk, and you count how many shares you're going to buy. You do it before the market opens, because that's very important. As I told you, the risk, you know, if you have $10 risking on one share and your risk is, for example, $100, you divide 100 divide by 10, and then you buy 10 shares. Okay, I was talking about it right here. You guys see it again. So that's very important. The entry price and exit stop loss, risk per share number, and then what you risking. If you risk 1 to 2% as a beginner, you know, 1% of your account is totally fine until you are more able to manage your emotions and you get used to your technique, and then you could be increasing to 2%. Some people might have huge account. If they have $500,000, 1% is $5,000. They might not feel comfortable to have this. So it's not a rule. It's just a suggestion. You can adjust it. If you have a bigger account, you might say, you know what, Leah, I just want to trade with $1,000 loss, because if it's more, it freaks me out and I don't want to be emotional, right? So that's what you think about it before you start. So how many shares you buy. And then, of course, market opens. So you take the trade, you set it up on auto. You can put it in your broker with, you know, limit order or stop limit order, whatever you decide, if it's a breakout or reversal. I'm usually trading with 10 EMA, exponential moving average. I find them more accurate than simple. The simple ones I look at on 100 and 200 simple moving averages. But I trade with the 10. Some people trade with 9. It's totally fine. It's like right next to each other. It's not a big difference. I also have the 20 exponential opened, but I trade usually with the 10 and VWAP, or anchored VWAP is now amazing from Alpha Trends. I love it. Trade Ideas have it actually there too. TradingView has it, Transpider has it. So yeah, that's it. And I don't want to buy stocks for day trade below 10 EMA, and I don't want to short them about 10 EMA. So that's like my strategy. Okay. And then I manage the trade, guys. If I'm up 1 hour, a lot of people ask me, oh, when do I get out? Okay, when I'm up 1 hour, exactly what I was risking, maybe I move the trade, I trail the stop automatically, or I can do it manually to where I bought it, so I can break even in the worst case. Or I take half off. If I see there is huge momentum and I got to the 1 hour really fast, I take 30% off, and then I trail my stop. So even if I go back to where I bought it, you already made 30%. So, you know, on 30% of the shares. So you can trail those stops as you wish. You know, you will find your strategy, and depending on the market too. For example, when I am up overnight on swing, 5%, I take my money. like I'm really like 5%, guys. Some people make it like, what do you get in money market fund? 4.5. So if I put some money into a trade and I'm up 4 or 5% very quickly, I take most of my money. Like this is a choppy market. I take the money and run. Again, you adjust it as the market goes, guys, you know. So that's it. Next one. Okay, here are my favorite tools quickly. I will, you know, I have the links for you in the chat, guys. You can see the chat. And you know, there you can use these affiliate links again. Like I'm an affiliate, I'll make a little bit. Please, guys, the Q&As at the end. I'm almost done here in the next 5 minutes. I'm done, and then we're going to go to the questions. So then, because I can't focus on the chat right now for you too much, because I don't want to, you know, get lost here in translation. So there are all the links. I really like Trade Ideas. If you guys are tech savvy, it's a complicated platform. But if you figure it out, it's really amazing. It has so many features, and it really gives you a good idea what to trade and what stocks to trade. Bar chart is excellent for news. I love it. It's really nice platform, very clean. You can see the gaps as well. It's not as technical as Trade Ideas, so it's more for like just the news and has some charts too. But for charting, I use TrendSpider and TradingView. TradingView, I love the most. TrendSpider has different functions. There is no better or wrong. They all are great, but every one of those has different functions, and you just see which one you like to use more. All right. So for journaling, I'm using Tradzilla, as I already said. Here again, if you guys wanna see it, scanners. Okay. And so good. Let's wrap this up, guys, so we can actually go to the Q&As. I hope you took notes. And so the summary, guys, of this webinar, mindset is really everything. How are you going to approach trading? That's going to really showcase if you're going to be profitable and if you stay in the game for long term. So you need to combine positive attitude and effective risk management, guys. Okay. So just being optimistic and then hoping, and then, you know, like hope and prayers are not a trading strategy. It's not going to guarantee you success. So traders must continuously learn new strategies and adapt to market conditions. As I was just saying, like all the time, market is dynamic. You don't want to have a swing trade strategy that worked last year, but in choppy market, you're going to keep losing money. So if you see that happening, you need to be flexible to change the strategy immediately, okay, and test something else. So always refine those strategies. And one thing that stays the same, guys, is your discipline. Okay. You can have all the strategies of the world, but you need to stay disciplined. And that's what I'm just really paying attention to be disciplined. And that way you will manage your emotions as well. Okay. So guys, okay. That was it from me. And now it's your turn. You're going to be asking me questions. So I'm going to look at the Q&As here. Okay, let me stop sharing. Okay. And I want to find the Q&As here. Okay, cool. Let's do this, guys. Let me have some water because I'm really thirsty. Do you have a close on trading options? What do you mean by close on? If you can elaborate on that, please, because I don't know what you mean with the question. Close on, like you mean stop loss? Please let me know. And I'm going to go to the other question. Hi, Leah. Anthony's asking, you said you do not buy options, you just sell them because it's hard to make money buying options. Why is it so hard to make money buying options? So look, when you're buying options, you are paying a premium, and you have to be right on the time and on the direction. So the stock might go to your price and direction, but it might not be there next week when your contract expires. And when it expires, you lose all the money. Okay. So when I sell the option, someone else is buying it. And if they are not right, I'm most likely going to get the premium. I'm going to keep the premium and I don't have to buy the shares. So for me, it worked much better. And I also try to sell options with delta about 28 to max 30, which is my probability. And that works for me well. I rather sell the option, take the premium. And if I see that there is a very risky time in the market, which I did a lot last year, I do a spread. When I sell put, I also buy put much lower strike. which I will be getting money for. It's going to be less because I'm limiting the premium, but I'm also limiting the loss in case there would be like a horrible problem with the stock and it would just like falling through the put and I would have to buy it. Okay. But again, these are cash secured puts. So I don't mind to own these shares if I get assigned. But again, the probability on those levels, I usually look at the daily chart or weekly chart, whatever that is. And I look at a support that's far away or it's below a gap, even if the gap would fill. Like last week, I sold puts on Tesla 145 for May. Like Tesla would have to get down to 145 and fill the whole entire gap that goes from 155 to 145. And usually gaps fill and the stock reverses. So that would be like, that's how I sell options. Okay. And I don't buy them because like, look, I wouldn't mind buying leaps in the money for later, but now we are in the situation in the market that we really don't know what's going to happen. We might be in this chop not moving really nowhere for a year or two. Like, I don't know. So it's very risky to buy leaps because again, it expires on you. You know what I mean? And then all your money is gone. So like if I'm in a bull market, I wouldn't mind buying leaps, like more closer to the money options. But like what is happening on social media, Twitter and Instagram, a lot of people just day trade options for like quick, like the 0 DTs that are expiring the same day. Like guys, this is pure casino in my opinion. And like also the weeklies, like you have to really know what you're doing and you have to be really fast because remember, shorter time of expiry on options, much more volatile they're going to be moving really fast. So you have to really know what you're doing, and that's where you make money if you're buying them. But I'd rather sell them, quite frankly. So, okay. D chart pattern. It's a daily chart. That's how I shortcut it. Daily is D, weekly is W. You know, so if you say like look at the 10 DEMA, that means look at the 10 daily exponential moving average. That's what I mean. Minimum for 400,000 daily volume. Yes. Daily volume. And in pre-market as well. Yes. I look at the volume in pre-market. That's very important for me. Yeah. Do you do positional trading also? Yes, I do. And, you know, positional trading worked really well in buying the dip when we are in bull market. It gets really tricky when you're in bear market because you keep buying dip that is dipping. So if you're doing positional trading in this kind of environment, you do it with money that you know you don't need for a long term because, you know, like how you do positional trading is basically what I do personally. I have 4 levels on a chart, usually around the support, you know, like whatever, if it's on now in bear market, I was even looking at the weekly chart for my 200 moving average 100. Remember also stocks that are below 200 moving average are really dangerous to buy because it takes a long time to get back up. But yes, I do positional trading. I do. And it's more investing, I would be honest with you, because in this kind of environment, you might wait for the money for a while. So just be ready for that. But doing positional investing is amazing because you're really buying companies that you know are undervalued in a bear market. There is a irrational sell-off, you know the fundamentals, and you're buying them because you know the value, a real value of the share, and then you're buying them on dips. Okay, Anonymous is asking, you mentioned in a podcast that you have dividends portfolio. And, where is it here? Could you provide resources on how to learn more about it? So what I do with dividends, I just started a portfolio. I was never really focused on investing in dividends until this year. And how you do it, you just check the history of the company, how they were increasing the dividends, how many percent, if they're sharing the dividends, and what's the basically history of this, like if it's a legitimate company. I only have, I think, 6 stocks in my dividend portfolio for now. I own much more, but they are not for the purpose of collecting dividends. They're more like trades for me. You know, like I see like J&J, I was buying on the dip, you know, and they have increased their dividend too. It's a great dividend stock, but I don't want to hold it. I just bought it for a trade. But yeah, with the dividends, you do your research. And remember one thing, when you have companies with really high dividends, American companies, like if you're like, if you guys are from other countries, you can buy dividend stocks in Singapore or anywhere. Like Singapore REITs, for example, give you 9, 10, 11%. It's great, and they're much more safe. Like the REITs are safer there than here, in my opinion, right now, especially with real estate. We have like, oh my God, what's going to happen? But in the US, if you have these companies, they're giving you way too good to be true dividends, then be careful, be cautious about it, because it's, it's not always going to last. And oftentimes they cut the dividends, and then the stock really tanks, and then you're stuck. So I don't have a course on trading options, but I wouldn't mind doing a webinar next month or two on selling options and doing spreads, because that's what I do, and that's what I'm good at. That gives me a lot of passive income, so that I would do in the future. Mass Crotchy, is there a good source of information for a few good day trading strategies for SPY? I like a book or a website. Thank you, Leah. I appreciate you're doing for us every day. Oh, thank you so much, Mas. I love a book that it's from Steven Weinstein, Making Money in a Bull and Bear Market. It's about the overall market, how to actually trade stocks in the longer term. But like the strategies, I don't have a book on that. There is like, honestly, like a lot of videos that you can look up on YouTube. There are some really good people, they teach you this, but I don't trade SPY myself. I just do spreads on SPY. So SPY is very important to have your levels. You just have to look at SPX, have the levels, and see how the SPX is developing, and then trade SPY off of that. But I don't have any recommendations, sadly, for that, for you. Do you do covered calls? Yes, I do. Yeah, I sell covered calls. Yes, I like it. I sell covered calls, but if you sell covered calls, where the strike is lower than your average price, it's kind of risky. You can do it, but if the price gets there, you will have to sell the shares with a loss. So just keep it in mind. And also, like, you want to be selling covered calls only if you really want to sell the shares, and you're not going to be sad because you are trapped. Like if you sell a covered call, you have a bondage on your hands. Like you cannot get out unless you want to buy the call back, and that can get really expensive, especially if the market or the stock starts rallying and the implied volatility goes high. So what you want to do, you want to be selling covered calls on a resistance when the stock gets to a certain level where you think it's going to retest and go back down, okay? And you sell it a little higher, and you tell yourself, do I mind if I lose the shares at this price, or I have to sell them? I say lose, but if you don't mind, then sell it. But again, like at least 2-3 good days that you see like the volume is like slowing down and the stock really rallied hard, and you want to sell the covered call to also have a premium. If there's a lot of volatility and implied volatility is high, you're going to get much better money for that. The same with selling puts. You want to be selling puts on an ugly red day. Oh no, what happened to here? Oh, so. All right, guys, you hear me, but you don't see me, which is sad. Can you guys hear me? All right. Okay, I will fix it very quickly. Sorry. So do you provide trading coaching, trade strategy service? Yes, I do. I do one-on-one coaching. You can send me an email, please, and I will fix it for you. I will send you my offer and what I do. The email is Leah. Let me send it here. I will send you my email, leah@leahthetrader.com. You can email any questions you guys have or any requests, and I will get the email. I'm personally taking care of this email, so you will reach me there. I don't trade crypto anymore. I have in past. I was in crypto for 6 years, since 2016, 17 until November. I still have a couple of Ethereums and some other shit coins, I would call them, on my MetaMask, but I don't trade crypto right now anymore. I spent so much time trading crypto, and I made great money trading crypto, but I realized that I cannot focus on everything. So if you want to really trade stocks well, equities, or you want to be selling options, that's already 2 strategies that I'm doing. And then like you want to be good in one thing. So if you are combining all of those, then you will never have. It's hard to focus and become professional if you trade everything. So I found what I like to trade, and I basically decided to stop trading crypto, because look, you can trade crypto, but you then focus on crypto. But if you want to do everything, you know how it is. More things we do, less professional we're going to be in all of them. Marcos, hi Leah, thanks a lot about your ideas regarding mindset and advice. Managing risk is not easy. Any books to learn options? I do Forex and futures, but never tried with options. Yes, 1 second. I actually have an amazing book for you guys that I really, really love. It's like this one. Options and volatility and pricing. Okay. You can get this one. It's huge. So be patient reading it, but it's one of the best books that I really like. Okay. Ahmed, is day trading not for me if I have day job and cannot sit in front of the screen all the time, or can I add the other orders, enter and exit and leave the trades and go back to work? Well, it's a tough one because, you know, as I said, like I start my research at 8 a.m. for day trading and I'm there until 9:30. I take a little 15-minute break for coffee, brush my teeth, whatever. So that's already an hour and a half. And then when the market opens, you know, you have to like research the trade. So it might take you another 15, 20, 30 minutes. If you don't find a trade, you might have to wait longer because you don't want to just like, it's not a given that any of the trades you planned at 9:15 is going to work out, right? You might open the market 9:30 and everything goes to crap, like it's a gap and crap. It didn't go as you planned, goes against you. So you might have to wait. So yes, sure, you can do it if you have the flexibility to leave your job for 2.5 hours every morning, or if you're in other time zone, I don't know what time zone you're on. Sure, it's possible, but I don't know what day job is going to be okay with you sitting there for 2 hours. And I don't think you should just set your stop losses and orders unless this is, I don't know, like I wouldn't be feeling comfortable, especially for a day trade though. You know, once you're in the trade, you look at how it's going, and then maybe when you trail your stop after you already take your partial and you are not going to lose money and you trail it, and then maybe you leave the runners run and then you can focus. But I think it's really hard for someone who has a day job. Like for you, probably swing trading would be much better, or just selling options, as I said, selling options on positions you own, or if you want to get into some positions, you can have nice passive income with that without staring at the market all the time, or the position trading as well, as we mentioned. Okay. So I don't do percentage on stop loss. Orlando is asking, please, what percentage do you use for stop loss? I do not do percentage. Usually when I traded options, I did 25% or 30%, and that was weeklies, because weeklies, guys, are cheap options. More in the time you go, more they cost. So leaps can cost you thousands of dollars, right? So you don't want to lose 30% on that. If some contract is for a weekly and costs you $100, $150, then you can say, okay, I'm going to do 30% stop loss, which is not that much money. So that all depends. But I don't trade options from that sense, because it was really hard for me. Okay, I buy a weekly, I buy 2 weekly. What do I do with this? So on my shares, what I do, again, the R system, there is no percentage, but you have to look at the technical chart and say, this is where I want to get in, and this is where it makes sense to get out. For example, below support. If the stock breaks through this support, I don't want to be in this stock, I want to get out. And then you look at the dollar price, how much you're going to lose on this one share. And that's how you buy the shares. You know, as I was explaining with the R system, that's how you count your shares. And you know, for example, I want to lose max $1,000 on a trade. Okay, that's my pain level. So if I want to trade Tesla and I say, I want to get into Tesla at 180, but if Tesla dumps to 170, I'm out. That's $10 I'm risking. So then I'm going to count, okay, I have $1,000 risk, divide by $10 on a share. How many shares can I buy? 100. So if I buy 100 shares of Tesla for 180 and Tesla tanks to 170, it stops me out. I lost $1,000. That's my pain level. But how you base it, you will look at your portfolio and see how much money you have, how much money you're playing with. And you say, okay, what is the 1% of my portfolio? If it's $50,000, that's $500. And that's going to be your risk. Okay, that's how you count it. All right, Mike. When selling covered calls or cash secure puts, how do you determine strike price? What's your process for that? So I usually do 30 to 45 days. I do the longer term ones, okay? At least a month ahead, because you get better premium and I don't want to be micromanaging those. And I look at the technical chart. So if the stock is falling, okay, like Tesla was falling, let me see, maybe I can share screen with you guys. So when Tesla was falling last week, you know, I told myself, okay, look at the technical chart. Where does it make sense that Tesla is going to go? And then you look at that. So here, let me find it for you. And this is stocks. And you have to always work with the technical chart. There is not, you know, there's not like, oh, I'm going to buy it on this strike. It's all about charting. That's why it's so important to understand how to read charts, guys. So let me try to share the screen with you. Tuck. Here. Okay, look. Tuck. So this is Tesla, okay? So last week we had this horrible day on Tesla, okay? It was on Thursday. So you want to sell cash secure puts when the stock has a horrible day, that the stock is down a lot, okay? So like Tesla was down a lot and it broke through this support. And then I look, okay, you see here is a gap. And then I told myself, okay, if it gets to this gap, which might fill actually the gap, I want to be below it. So I sold the puts at 145 because it made technical sense. Okay, so that's where I sold my puts, right here, 145. Because if it even fills the gap, maybe, and most likely, it's probability. It might even tank through that, but it most likely is going to retest and go back higher. It already went a little bit, you know, it's an inside day, but it was a better day next day. So I sold, that's how I sell my puts, guys. You know, and I got some premium. And then I told myself, because Tesla is very temperamental, this could look like a double top. If we have a bad market, you know, SPY decides to go down again, we might be going down. Tesla is very volatile. It's a 2 beta stock, so it's moving much faster than the SPY. So I wanted to protect myself, and I bought a put. That's called the spread, because with stocks like Tesla, you know, like you have to understand every cash secure put you sell, it's times 100. So 145 is $14,500 I have to lock in to buy this. So if I sell 2 of those puts, that's like almost $30,000. I don't want to risk that. So what I did, I said, okay, I'm going to buy a put right here, 125. And that way I protected myself, because if the stock would tank through, I'm making money on this puts. Okay. And then I would have this risk here from 145 to 125. Okay. So that's how I do puts. Okay. Or on covered calls, the same thing, but other way. Like covered calls, you sell when you have stock in a huge trend. Like here, you see Tesla was getting to the 200 moving average on daily. That's the gray one. I have it. I was like, okay, here, if you have 100 shares of Tesla, you have to have 100 shares to sell covered call. Sorry, I'm drawing all these lines. So here, you could tell yourself, okay, I have 100 shares. I bought them somewhere here. Let me just sell covered call at like 250, because first of all, Tesla would have to get through the 200 moving average. It would have to stay there. It was accumulating here. This was a strong 2 days. Bang, sell the covered call, 250. You see here is another resistance up there. Resistance, the 200 is resistance. Here the candle is resistance. It would have to get through like this and through the moving average in order to actually get to 250. So that's how I'm looking at it every time with options. It's not about strike. It's more about the technical chart. And also, like, I want to get at least 2% on this. So if I'm locking $30,000, I want to get at least $600 for those contracts. You know, that's my rule. Okay. For trader, if Tesla stock is good for long-term investment, that I can't answer you. I'm not a financial advisor, my dear, and I don't answer about individual stocks. I have no idea. Quite frankly, nobody knows. Ahmed, when you say minimum 400K, do you wait till the volume in the session? You see it in a pre-market. And a lot of these scanners like bar chart, it's the relative volume. Also, you need to see how the volume is comparison to day before, for example. So you look at that in the pre-market. You want to start doing your research in the pre-market. Like usually you have also the news, like there are news and catalysts in pre-market, and you see the volume of the stock. So you want to do it before the market opens. And then when the market opens, it's most likely going to be even more. Oh, Anthony. Okay, bye, Anthony. Thank you so much. Would you consider, Ty is asking, would you consider webinar reviewing how to having manage review your 2025 core stocks that you review daily? So I have them for like a year, 2 years, almost year and a half, these guys. And I trade around them. I sell options on these guys. I own most of them too. So I trade around the stocks that I researched in the past and I still own. And every quarter, I look at the earnings report. If everything is fine, I keep them. If one report is not okay, it's fine. If two reports are not okay, maybe the stock has a hard time, I add more. If there would be 4 consecutive earnings that are bad, it's showcasing something is really off with the company, I would probably reevaluate and get out of this position. Or also, like, it depends, like sometimes the shares split and they're not as much fun to trade, or they're more fun to trade. So I just like to trade certain stocks. Like my favorite ones to trade is AMD, Nvidia, Tesla, Amazon, like all these big tech stocks. Microsoft is fun to trade. I know how they're moving. Okay. Name of the book is Option Volatility and Pricing, guys. That's really great book, if you can see it well. What's your methods to reset after losing trades? Jesse is asking. If I lose, as I said, if I lose on a trade and it's my plan and I just get stopped out because the market is not corresponding, I don't care. If it's 2 trades on a day, I get overwhelmed and I stop trading. And I just tell myself, tomorrow is a new day and I am going to start from scratch. And usually sometimes I overtrade too. I have 2 losing trades and I still want to go and trade more. And sometimes I make money, but guys, losing on 3 trades in a day, it's kind of sucky. So, so I rested with just really taking day off. I go work out usually. I love to trade in the morning, and around 11, 12, I go work out. I go to do hot yoga or something that calms down my mind. I go to sauna. Maybe I go to sit in the sun for a little bit, have a nice lunch, and then, don't look at the market, do something else. I read. I don't even analyze the trade immediately after because I'm upset. So I wait, and then maybe in the evening I will analyze the trade. That's what happened actually. How many trends will you have on at a time? If it's a day trade, only one. I don't do more than one day trade in a day. No, sorry, in a day, in the moment, because for me it's enough. I really cannot focus on more than one trade. I rather take quality over quantity. And when it comes to swing trades, 2 free. I can open 2 free swing trades at the same time because, quite frankly, I don't look at them all the time. Again, I have them on my watch list. I know if there is a huge day, like also you can create watch lists on. Like even here, you guys still see the screen. You can create watch lists, and you can have your swings there, You create watch lists and you have your swings, and then you see on a day if the stock is up 5, 6, 7%, you're like, whoa, okay, let me get out, or let me take partial. If it doesn't, hit your stop yet, or sorry, your R yet, you can reevaluate. But I can have 2 free open. It's fine. It doesn't bother me. Day trade only 1. Okay, Henry, thanks, Leah. That was cute. Emotions is the hard part of trading. We appreciate all about. We are expecting to see more events. Thank you guys very much. It was very nice to have you all here. And yeah, follow me on YouTube. I started my little YouTube channel. That is fun. I'm going to be working hard on making the content better and better. A lot of fun topics coming up. Of course, Twitter, Leah the Trader, and Instagram. Please be careful. There are so many fakes out there. So leah.d.trader is the only one I have. Everyone else who is reaching out to you, trying to sell you crypto, don't listen to them. So that's pretty much what I have. And of course, my newsletter. I hope you guys are all signed up. I think you are. I'm going to be sending every 2 weeks a paper or summary of some research studies that I read about emotions and trading. So I hope you guys are going to like it. And you can, if you're signed up to my newsletter, you will get it. It's going to be always a different topic on different emotion and how to manage it. So thank you so much again. Thanks for being here and all these great questions. I had a good time, and have a wonderful night or wherever in the world you are. Bye, guys. Thank you so much again.